Okay, students, good evening. Am I audible? Can you hear me?
Yes, madam.
Okay, we can start. So in the last session, we calculated capital allowances. So I think you can do that calculations alone. I gave you two question papers. One paper we did together. Then the other paper I asked you to calculate by yourself. So I think you calculated, you have done that homework. Later on I will explain it, but I think all of you know that you have your mid exam on 26th of June. Mainly it will be in the evening around 5:30. So still our participants are logging, therefore I will do this explanation again after we finish this session. Mm, so this is just a reminder. Okay, I will do. What we have to do is actually last week we prepared calculations for capital allowances. Then today we can start from the balance part of the deduction rules. So I think these questions are regarding the mid exam, so I will explain it in the after we finish this presentation slides, because still we have 47 participants. Latecomers may be there, therefore I will explain about the mid examination later. Until then we can start the session. So this is section 17, because up to section 16 we did in the last session, that is for capital allowances. Then this deduction rule is for losses on realization of business assets and liabilities. This is section 17. So this is one of the specific deduction rule. So it says if we have a business asset and if we have a loss from that asset, that loss can be deducted under section 17. It means in calculating the person's income from business, that means that asset should be used for the business purposes, but it should be an asset that we can identify as a capital asset. So I think you can remember the definition for the capital asset. So it is an asset that does not include depreciable assets and trading stock. So all other assets can be categorized under capital assets, but in the definition you have specifically given what are the capital assets. So among that capital assets, when we are realizing that capital asset, then we will have a gain or a loss. So if we use that capital asset for the purpose of investment, we call it investment asset. If we use that capital assets for the purpose of business, we call it business asset. So if that business asset is realized, and after realizing if we have a loss, that loss can be deducted under section 17. Okay. Who can tell me one of the business assets? So in the definition it says capital assets does not include depreciable assets and trading stock. So this is a special kind of assets. So give me one example that can be used in the purpose of business. So in the business, people can use this asset. What is that asset? Who can tell me? Give me an answer. What kind of asset can be a capital asset that is used in the business? Capital asset. Capital asset. I think you can remember. Go to first slides. In that slide set, so in that set of slides, you can find the definition for business asset. So one of the example for business asset is a land, because land is not a depreciable asset. In the definition for capital assets, it says capital assets does not include depreciable assets or a trading stock. And land or building, share capital interest. Likewise, there are several types of assets. But if that asset is used for the purpose of business, then we call it business asset. That means a land can be a business asset in one person's hand, but in the other person's hand, it can be a capital investment asset. For an example, I am not doing a business. As an investment, I can purchase several lands. So I am not doing anything for that one, but just holding that asset with me. If I can earn some amount by holding that asset, we call it investment asset. So there may be some buildings, there may be some lands. Those are investment assets. That means if I am not doing a business, I have additional house. So what I have to do for that house, we can earn money. Therefore, I can let the house. So I can rent it out. So that means that asset can be categorized under investment asset, not the business asset, because I am not collecting rent income by engaging in a business. It is that asset is just I have that asset, that is extra asset I have. I am holding that asset for a period as an investment. Therefore, I call that building or a land as an investment asset. But in another person's hand, he may use that building for the purpose of renting out, and he earn income by renting that building. Then we can consider that income as a business asset. If that income is a business asset, then the building we are using can be categorized under depreciable asset. It is not the business asset. But if that person has a land, and if that person's business is situated on that land, building or parking as a parking area, but still he is using that land for the purpose of business, then since it is not a depreciable asset, we can consider it as a capital asset that is using for the business. So if we sold that kind of land that we use for the businesses, we call it business asset. If we have a loss after realizing that asset, that loss can be deducted under section 17. Suppose after realizing that asset, I incurred a profit. Then what I have to do? If I incurred a profit, what I have to do? If it is a loss, I can deduct it under section 17. Suppose it is a profit, then what I have to do for that profit? Who can tell me? Who can tell me? What is the answer? Prashadini. Prashadini, she said that it is a capital gain. Oh, no, it is not a capital gain. It is not a capital gain. Why? Why? If it can be a capital gain if I sold an investment property. Because I will explain when we are doing investment source, but until then you should be understood. You should know the capital gain is a gain that can be earned by selling, realizing investment asset, not the business assets. So here we are going to sell a business asset, not the investment asset. It is a business asset, not the investment asset. So what is the, where we have to include that profit? That my question is, if I am selling a capital asset and if I earn a profit, where should I declare it? Under which category? It is another income related to business income. DAA, I don't know the name, but I have a correct answer. Actually, we cannot say it is as another income, but it is still a business income. Yes, because since this is a business asset, after realizing that business asset, and if we earn a profit, that profit should be categorized under business income. If we have a loss, that loss can be deducted under section 17. Yes, section 6.2, that is 2. Section 6.2. Section 6 explains what is the business income, and section 6 subsection 2 says what are the items that we have to include under business income. In that subsection 2, it says the realization of a business asset, a gain on the realization of a business asset should be a part of the business income. A gain on the realization of a depreciable asset, also a part of the business income. Not only the turnover, not only the revenue we received, but the gain on realization of depreciable asset or a gain on the realization of business asset is a part of the business income. That is why when we are calculating capital allowances in our last session, we calculated the gain, and we have to include that gain. If there is a gain, that gain should be included in the business income. If it is a loss, that loss can be deducted under section 17. That is section 17. So then we can move to the next deduction rule, that is section 18. So section 18 is not applicable to an individual because without any restriction, financial cost that is considered as an interest income, interest expenditure, so that interest expenditure we could deduct under section 12. I think you can remember our first specific deduction rule, that is section 12. Under section 12, I explained that an individual can deduct their total interest expenditure if they incurred that expenditure for the purpose of earning their business or investment income. Either it can be by using total borrowed money, or if they can purchase any asset from that using that borrowed money, and that asset should be used for the business or investment, then that interest portion relevant to that asset can be deducted under section 12. But if that person is a company, total amount cannot be deducted, but it should be limited under section 18. So there is a restriction. Deduction of finance cost is a restricted amount for a company. So when we are deducting the financial cost, we have to apply some specific rules for the calculation of that restricted amount. So this is also applicable for the business or a investment. So after April 1st, 2021, there was an amendment to section 18. Prior to that, we applied another one formula, but after that we wanted to simplify that formula. Therefore, we amended the act, amended this section 18. So this section 18 is applicable only to companies other than financial institutions. Financial institutions means banks, financial companies. So other than financial institutions, but to all companies other than financial institutions should restrict their financial cost according to section 18. So for the financial cost and for the financial instruments, we have a special definition under section 197. So one of the most general financial cost is the interest amount, and the financial instrument is the loan we borrowed from a financial institution. So that is the financial instrument. Then this is the formula we have to apply, that is applicable after 1st of April 2021. So I am going to explain only this part because the previous formula we applied prior to this year of assessment is not relevant to you. So therefore I am going to explain only the formula applicable after 1st of April 2021. So what is the A? A means total of the issued share capital and reserves of the entity, but the reserves exclude revaluation reserve. So A means share capital plus reserves. Reserves does not include revaluation reserves. All other reserves should be included in the reserves. Then B equals, in the case of a manufacturing entity, the number is 3. In the case of an entity other than a manufacturing entity, the number was this is prior to 1st of April 2021. This is the applicable provision after 1st of April 2021. That was the prior formula applied for the period prior to 1st of April 2021. So this identification of these 3 and 4 is little bit difficult, and it is very complicated formula. That is why we amended this formula. The new formula is this one. So still the A is financial cost, and B is the value of the instrument. C equals C equals the share capital plus reserves multiplied by 4. That means it is more similar to this A. Prior to April 1st, we had another formula. So it is very similar to A. So this is the formula applicable after 1st of April 2021. A minus A divided by B multiplied by C. C means the 4 times of the total issued share capital plus reserves, and this reserves also should not include revaluation reserve. Then A means the financial cost. Financial cost, in general term, it is the interest. B means the financial instrument, that is equal to the loan we borrowed. Then what we have to do, we have to identify what is the share capital of that institution, what are the reserves. So that share capital and reserves, the value of the share capital and reserves should be at the end of the year value. But for the financial instruments, we have not specifically mentioned whether it is at the end of the financial instrument or beginning of the financial instrument, because it is not relevant, because we are considering the financial cost value, on which value we have to pay this financial cost. That is the value we have to consider as a financial instrument. It can be at the end of the value or the beginning of the value or the middle value. It can be the value we apply to calculate the financial cost. Then the next condition here is we can deduct only the allowable one. After applying these things, so after applying this formula, we have to compare that eligible financial cost with the financial cost actually incurred during that year of assessment. If that actual amount exceeds the allowable amount, the balance amount cannot be allowed as a deduction. Therefore, we can carry forward that not allowable amount for a 6 years period. For a 6 years period, but there is a specific term, it says, but only to the extent of the any unused limitation in the subsequent year. That means every year we have to calculate this calculation. We have to do this calculation using the data relevant for that year of assessment. Then we have to determine what is the value we can allow as a deduction. After calculating that amount, after deducting that year's finance cost, if there is any unused amount, that unused amount can be used to deduct the carried forward undeducted balance. So when we are doing the example, I think you can very clearly understand how do we have to do it. So sometimes there may be some issues. For some periods, there may not have a financial cost. Then we will have an issue. Suppose we have in the year of assessment 24-25, we have a finance cost. We couldn't deduct some amount. We carried forward that amount to be deducted in the year of assessment 25-26. Then again in the 25-26 year of assessment, by applying that formula, we have to calculate the allowable amount for the deduction. Then first of all, we have to deduct the amount incurred during that year of assessment. If there is any unused amount, then only we can deduct the amount we carried forward from the previous year of assessment. If in the year of assessment 25-26, if they have not incurred any finance cost, then when we are applying that formula, that means A divided B multiplied by C, if A is 0, then the total result will be 0. 0 means we cannot deduct any amount from that year of assessment. Then we will be in trouble because we have a carried forward amount from the previous year, but since during this period we do not have financial cost, since it is 0, we cannot deduct that carried forward amount. So this kind of practical situations we identified. Therefore, this amendment was made to the Act. It says, if there is no financial cost incurred during this year, then we have to apply the immediately preceding year's figures to calculate the relevant financial to calculate the eligible amount for that year of assessment. So this is very important. We have came across this kind of practical situations. So for the year of assessment 21-22, we didn't apply this restriction because at that time, during that period, I think you can remember, there was a pandemic, COVID pandemic. Therefore, most of the companies, most of the hotels, they faced severe financial loss. Therefore, they requested not to apply this restriction for the financial cost because they borrowed lot of money. Their income, their turnover was very low during that period, but they had to incur some general day-to-day expenses for maintaining their businesses. Therefore, they borrowed lot of money from financial institutions. So considering that situation, special situation, we didn't apply this restriction for the taxable year of assessment 21-22. So when we are calculating the 6-year period to be carried forward that unused balances, we skip that 21-22 year of assessment. We did not consider, we did not count that year for the 6-year period. Okay, this is the general situation of this section 18. Then when we are applying when we are doing that example, you can very clearly understand how to apply this section 18 in the practical scenario. So for the reserves, we had an issue because we had several questions with regard to the reserves. For some companies, we identified minus reserves. The minus reserves means that is a loss. If that company is a loss-making company, they had a loss, not the reserves. So when we are calculating C means share capital plus reserves multiplied by 4. If reserves are minus reserves, then share capital is a plus value, reserves is a minus value. Sometimes reserves value is higher than the share capital. Then they had a minus value, so they couldn't deduct any amount. So that was the applicable law for the reserves. Therefore, if they had a minus reserves, they have to consider it as a minus value. So this is the case. We had a case, special case, Samson Tiles versus Commissioner General. They requested a decision from the Tax Appeals Commission with regard to this case. So and the Court of Appeal decision was to consider, not to consider minus reserves for the calculation of thin capitalization, but thin capitalization was applied in the previous act, not the current act. Current act means section 17 of second number 24 of section 17, number act number 24 of 2017. So it is the new act. The previous act was number 10 of 2006. In that act, we could find thin capitalization. Thin capitalization also very similar to this restriction, but this decision was given for the thin capitalization rule for the previous law, not to the new law, that means number 24 2017. So therefore still we are considering reserves. If that is a minus reserve, we consider it as a minus reserve. So this is the example. I can apply section 18. So in this company, S Limited is a company engaging in the business of manufacturing. So prior to 2024 April 1st, we had to consider whether that company is a manufacturing entity or other than manufacturing entity. After considering the nature of that entity, we applied number 4 or number 3. But after introducing new formula, without considering whether that company is a manufacturing company or other than manufacturing company, to both companies we applied 4. So C means share capital plus reserves multiplied by 4. So reserves should not include revaluation reserve. So now we are going to apply these figures to the formula. So here I have mentioned it is a manufacturing company. Irrespective of whether that is a manufacturing company or not, we can apply 4. So you have given share capital for the year of assessment 20. Suppose now we are in the year of assessment 23-24. Then we are going to calculate the eligible amount for the deduction under section 18. So you have given share capital asset 24 March 31st, that is 5 million. Then you have given reserves, that is 2 million. Now you know the value C, that is share capital plus reserves. Then you have to multiply share capital plus reserves by 4. Then you have given long-term loan, that is the finance instrument, that is 30 million. Then interest for the year paid at the average rate of 12% in 23-24 and 15% in 24-25. So the percentage is 12. It is 12%. Average rate is 12%. 12% by applying 12% to 30 million. Interest for the year is 4.2 million. Then we can go to the next slide to calculate the eligible amount. So financial cost A equals 4.2, that is the interest portion. Then we are going to deduct A, divide A by B. Then we can get a value A divided A here. Here we have done that. So 4.2 million divided by 12 multiplied by 100 equals 35. So this is the formula, this is the value of so we have incurred 4.2 million. So that is the interest. Then interest was calculated by applying 12%. So after applying that 12%, we can calculate the financial instrument, that is 35. 4 multiplied by share capital plus reserves to be calculated C, that is 28 million. Then A divided by B. So you know what is A, then what is B. A divided by B equals A divided by B multiplied by C. The value is 3.36 million. This is the 3.36 million is the value we can allow as a deduction under section 18. But actually they have incurred 4.2 million. Then what we have to do? We can allow only the allowable amount. The balance should be carried forward to be deducted within 6 years period. Only within 6 years period we have to deduct that amount. If we cannot deduct that carried forward amount within 6 years period, we have to disregard it. Nothing to do with that one. So now we are in say 23-24 year of assessment. Then we have to move to the next year of assessment, that is 24-25. So suppose now we are in the year of assessment 24-25. So you have given capital to share capital, reserves, long-term loan asset, 1st of April 2024. It is not necessary to consider this value, but we have to consider the value, the rate to be calculated, the relevant financial instrument, because actual value, actual interest amount is given in the example. Then we can go to the answer. So you have to apply the figures relevant for year of assessment 24-25 to the formula. So finance cost or interest expenditure is 4.5. Then we can calculate the attributable financial instrument to the financial cost. So financial cost divided by 15 multiplied by 100. Then you can calculate the relevant financial instrument, that is B. Then you have to apply share capital plus reserves, that is 8 million. Here share capital 5, reserves 3, altogether 8 million. 8 million multiplied by 4, that is C. Then A divided by B multiplied by C, you will have 4.8 million. So this is the value you can deduct for the year of assessment 24-25. So when you are deducting previous carried forward amount, prior to that you have to apply current year's figures to the formula, and you have to calculate a deductible amount for that year of assessment. Then you have to deduct current year's finance cost first. If there is a balance, we can use that balance to be deducted carried forward amount. In this example, allowable interest is 4.8 million, but the actual interest cost we incurred is 4.5 million. That means still we have a balance of 300,000. From this 300,000, we can deduct carried forward amount, that is 840,000. But we have only 300,000. So after deducting this 300,000, still there is a undeducted amount out of this 840. That is 540. So that 540 can be carried forward to next year of assessment to be deducted. But Within 6 years period from the year of assessment 23-24, we have to deduct it, otherwise we have to disregard that amount. What is the main thing, main condition we have to keep in mind? Prior to deduction of the previous year carried forward amount, first of all we have to deduct current year's incurred amount. Then if there is a balance, the carried forward amount can be deducted. So this is the financial cost deduction rule. But this is applicable only to a company. When you are calculating individual's tax liability, you should not apply section 18. Actually, you cannot apply section 18. Why? Why you cannot apply section 18 when you are calculating an individual's income? Why? What is the reason? Who can tell me? Who can tell me the reason? Due to one reason, we cannot apply section 18 for individuals. Why?
Cannot
What is
apply this equation.
Yes, we cannot apply this equation. Why? Why we cannot apply? Yes, there is
Share
no
cap.
state. Yes, no stated capital or reserves. So therefore, if you forgot it, but when you are going to apply this equation to an individual, you cannot find relevant figures, because A and B A and B are available, but C you cannot calculate C when you are considering an individual's tax liability, because no share capital, no reserves. So therefore section 18 is completely applicable for company. No, partnerships also cannot apply since they don't have a share capital or reserves. Yes, there is a question. Madam, if that 24-25 also interest paid is more than 5 million, how to apply? Interest paid is more than 5 million. What do you mean by that? Interest paid is more than 5 million. Interest paid is more than 5 million means now for the year of assessment 24-25, if interest paid is more than 5 million, that means allowable amount is 4.8 million. You have incurred 5 million, then you can allow only 4.8 million. The balance 200,000 plus previous year 840 together should be carried forward to the 25-26 year of assessment. But you should keep these undeducted amount for each year of assessment separately. Why? Why? Because you can carry forward that amount only up to 6 years period. So therefore you cannot aggregate 840 plus that 200, 860. You cannot carry forward all together. You can do, but you should know the breakup of that interest to consider that 6 years period. Suppose you have not incurred finance cost for the year of assessment 24-25. Suppose you have not incurred amount as a finance cost for the year of assessment 24-25. Then what will happen? Then the finance cost, that means A equals 0. If A equals 0, then what will happen? If we are applying 0 to the formula, total value will be, the result will be 0. That means no amount can be allowed as a deduction because we cannot apply this equation, this formula. The value will be a 0 amount. That means no amount can be deducted under in year of assessment 24-25. That means if there is no value, then we cannot deduct previous year carry forward amount also because no value is there. Here you have 4.8 million, but if you are applying instead of 4.5 million 0, then the total result will be 0. Then allowable amount will be 0. If allowable amount is 0, you cannot deduct either this carried forward amount. That is why we made that amendment. If for a year of assessment, if A is 0, then we can apply previous year value for the calculation of allowable amount. I think you can remember that provision here, provided that in the case of where there is no financial cost incurred during the year in calculating the unused limitation for the above purpose. Above purpose means to be calculated unused amount and the deductible amount. The limit referred to in subsection 2 shall be calculated by using the same amounts of the immediately preceding year and so on. So, immediately preceding year's figures can be applied for the calculation of the formula. So, I think now you can understand how do we calculate, how do we apply provisions for the calculation of finance cost. Is it clear? Is it clear? Yes. Then we can move to section. Very good. Then we can move to section 19. Section 19 is for the deduction of losses. In the real business, there may be business losses for some certain periods, for some future periods from the businesses, from the investment, we may incur losses. It is a realistic situation because it can be a loss. It can be a business loss or a investment loss. So if we have only one business and if we have incurred a loss during 1 year of assessment, that loss can be deducted in the subsequent year of assessment if there is a profit. If you have more than one businesses, if one business incurred a loss, then that loss can be deducted against the profits of other businesses. So this is the rule. Same as if you have an investment loss, that investment loss can be deducted against the same investment profit. So when we are deducting business or investment losses, we have to consider very specific conditions. So we had very complicated conditions prior to 2021 and after 2020, prior to 2023 also, because when we are deducting these losses, we had to consider the applicable tax rates for that business. Because if a person has more than one businesses, if one business has a profit and the other business has a loss, then if one business, the profitable business, for the profitable businesses, applicable tax rate is higher than the profit, higher than the business loss if it is a profit. Sometimes if we have two or more businesses, for some businesses we can apply lower rates. For some businesses we have to apply higher income tax rates. For some businesses those are tax exempt. So if a profitable businesses applicable tax rate is higher than the business we incurred a loss, then we couldn't deduct that loss from the higher profitable business because we have to protect revenue to the government. As well, if it is a loss from the business, that business loss can be deducted either from the business income or the investment income. But only thing we had to consider was the relevant tax rate for both businesses. If it is an investment loss can be deducted only against the investment profit. If it is a business loss can be deducted either from the business loss or a investment loss. But if it is investment loss could be deducted. Now also it is same, can be deducted from investment income. But when we are deducting that profit loss from the profit, we had to consider applicable tax rates to protect revenue. But after 2023 year of assessment, for all businesses applicable tax rate was same, that was 30%. Therefore, we hadn't much complications. But now again we have two tax rates, that is 30% for normal businesses, but for IT and other sector businesses applicable tax rate is 15. Then we have to consider when we are deducting our our business losses or investment losses, what is the applicable tax rate for each business. Lower rate business loss cannot be deducted from the higher rate business income. That means we are going to lose our tax income. So that is why we have this kind of provision. If it is an exempt loss, that means loss incurred from the exempt business, that exempt loss can be deducted only against the businesses that are exempt from income tax, because we cannot lose our tax revenue by allowing them to deduct their exempt losses from the profitable taxable profits. So that is the rationale behind this. So when we are deducting losses, we should keep these important conditions in your mind. First one is business income can be deducted against business loss can be deducted against business income and investment income. Investment loss can be deducted only against investment income. That is the first condition. The second condition is lower rate loss cannot be deducted against higher rate profit. Lower rate loss cannot be deducted against higher rate profits. So for the lower rates, we are not going to apply tax rate, but for that lower rate business, they are the the loss we incurred for the business, that business, the applicable tax rate for that business is maybe concessionary rate. Then if there is a loss, and if that loss is lower rate is applicable for that business, we cannot deduct that loss against the profit which is taxed in higher rates. So this is the loss deduction rule. So up to now, I have explained all the specific deduction rules. So interest is applicable, section 12 is applicable both for business income and investment income. Section 13 is applicable only for business because trading stock is available for a business, not for the investment. Then section 14 is applicable for repair and improvements. It is applicable only for business because repair and improve for the deduction of repair and improvements under section 14, that repair and improvement expenditure should be incurred in respect of the depreciable asset. So depreciable assets are considered only in the business income. That means if we are using some assets for the purpose of business, that asset can deduct capital allowances other than land. All other assets can be deduct capital allowances. So depreciation, that is why we call them depreciable asset other than a car used for the traveling purpose. So if we incur some expenditure for that kind of depreciable asset, we can deduct that expenditure under section 14. Since it is a expenditure incurred for depreciable asset, this is applicable only for business source. Then research and development and marketing and communication expenditure under section 15 and 15A, that is also applicable for business purpose. Then capital allowance and balancing allowance, as I explained earlier, that is applicable, section is section 16. Then it is also applicable for business income. Then today I explained about section 17, 18 and 19. Losses on realization of business assets. So business assets mean capital assets that are used for the business purpose. We call that kind of assets a business asset. If there is a loss after realization, definitely it is a part of the business income source. Therefore, we can deduct it under section 17 when we are calculating the assessable income from business. Then section 18, that is deductible amount of financial cost. That is applicable not only for business but for investment. Both business and investment it is applicable. Then business and investment losses, that is also applicable for both business income and investment income. It is under section 19. So all specific deduction rules were considered. Then you know section 11, that is for the main deduction rule. Then section 18 explains what are the expenses that are not allowed as a deduction. So I have already completed all deduction rules. If you have any question regarding these deduction rules, you can ask now. No questions? All are clear? All deduction rules are clear? Okay. If all are clear, we can move to the next slide. So this is the transitional gazette. So this is not in most cases this is not relevant, because very few cases it is applicable now, because when we are introducing new act, we repealed section we repealed number 10 of 2000 Act and introduced number 24 of 2017 Act. So when we are applying 2017 Act, there may be some balance items from the previous Act. Sometimes carried forward amounts, depreciation, balance depreciation amounts, balance exempt periods, like that. So transitional gazette was issued to identify, to consider that balance amounts. So this is applicable for that balance amounts. That means, for an example, in the previous act we had given some exemptions. That exemption is maybe for more than 15 years, 20 years, 10 years, like that. So if they started their first exemption period under number 10 of 2006 Act, but still the balance exemption periods are still there, because we introduced new act, present act in 2018. Therefore, if we repeal that act, the validity of that exemption also remove. But we cannot do that kind of things, because this is a law. So we have to consider that kind of situations. That is why we have applied, we have issued this gazette notification. It says, if there is a balance exempt period, then until it finishes, until the end of that year exempt period, we can claim that exemptions, even though that exemptions are not available under next act. That means under Indian Revenue Act number 24 of 2017. So likewise, we have given this issued this transitional gazette. The other example, capital rates of capital allowances, application of calculation of capital allowances. In the previous act, capital allowance rates are completely different from the capital allowance rates applicable under 2017 Act. Therefore, this transitional gazette says any assets purchased prior to 2018 April 1st, capital allowances should be deducted in accordance with the rates available under that previous act, because that rates are available under previous act. They purchased their assets prior to April 1st, 2018. Therefore, they had to apply capital allowances rates provided in the previous act. But for the assets purchased after 2018 April 1st, we should apply capital allowance rates provided in the 2017 Act. So if there are some assets depreciable periods, then to that balance periods also we have to apply previous act. So, for an example, for the machinery, applicable depreciation rate for the assets purchased prior to 2018 April 1st was 33.33. That means one third. Now applicable rate is 20% or for 5 years period. When we are calculating 2018-19 year of assessment capital allowances, we applied one third for the assets purchased prior to that date. For the assets purchased after 1st of April 2018, we applied 5 years period capital allowances. So, we could do it because of this transitional gazette. Otherwise, we couldn't apply that kind of things for the practical situations. So this is also that kind of thing. Finance leasing, if it is a finance lease to the lessee, we had to we had to allow, yes, there's a question. It is covered by a black strip. Is it okay now? Can you see it now? Is it visible now? Okay. So this is finance leasing to the lessor under the previous act. Depreciation allowance on lease stock allowed as a deduction. No, we were here. Under the finance leasing for the lessee, under 2016 Act, lease allowance was rental paid during the year or 1/5 of the total rental value for motor vehicles, furniture, plant, machinery other than information technology or calculating machine, or 1/4 of the rental payable for the information technology equipment. So this is the applicable rates for lease allowances. But after this act, 2017 Act, capital allowances on cost of assets, capital allowances were given on the cost of the asset, because after the introducing of this 2017 Act, if we purchase some assets under finance lease, at the time of obtaining that, entering into that agreement, we considered as we purchased that asset. So, owner user condition also fulfilled. Therefore, under section 16, we can grant capital allowances. So, interest part can be allowed as a deduction under section 16, 11, 12 and 18. If it is an individual, under section 12, we can allow total amount. If it is a company, we have to restrict that lease interest under section 18. Okay, so these are the deduction rules. I have already covered all deduction rules applicable for business and investment income calculation. So do you have questions, or shall I move to the next set? Do you have questions? All are clear? ප්‍රශ්න නැද්ද? හොඳටම තේරුණාද? Okay. Clear. Yes, very good. Now we can move to the next part. So that is the calculation of assessable income from business, because as I explained earlier, you have your examination, midterm exam. Oh, Kavini, are you hungry? Yes, there is a request for a break. Okay, it is 8:20. I will give you a break, small break. I know all are very tired because you have come from your office work. ගොඩක් අය රස්සාවල වලට ගිහිල්ලා ගෙදර ඇවිත් ඇති. I am also, yes, we are very tired, but however we have to finish our work. So I can give you 20 minutes break. 8:30 we can start the session. Okay, shall we start? Yes, we can start the calculation now. This is individual income tax calculation of assessable income. This is the paper 1. So now we are going to start a calculation up to assessable income. So for the calculation of tax liability, we should calculate up to taxable income. Then we have to apply tax rates, but still we have not yet done up to now. Therefore, on 26th you have a mid exam. Actually, it is a physical exam. It will be held in the university by 5:30. So you have to go to the lecture hall by 5:30. Miss Kalhari will inform you the exact place and the time. So it is a tax calculation like this. Like this means this is the first one. Then I will do another paper 1 and paper 2. So what you have to do is you have to practice these papers several times. You have to do the calculation. Then you will understand how to do it. So up to now we have already done some calculations for employment income. Therefore, in this calculation I have not given the total types of income for the employment income, just a total amount I have given, because my aim is to give you an understanding about the employment income and business income, assessable income from mainly assessable income from business income, because we have already calculated assessable income from no writing questions, actually calculations, mainly calculations. Yes, homework questions I have given you. Capital allowance questions. I have extracted that kind of capital allowance questions from these two question papers. So let's do these two question papers first. Then I will share it with you. If you have any issue, you can ask, because you have 1 week period. So today I want to start this calculation. If time not enough, then next week also we can do the calculation, and I can give some answers for your questions if you have. Then on 26th you can face your mid examination. I think all are clear. So you should bring your calculators, because for the calculation of the taxable income you have to apply, you have to divide, you have to multiply. Therefore, please bring your calculators with you. I think they will not allow you to use phones for the calculate. Mid exam will be for 1.5 hours. There may be mainly one question, 40 marks. maybe one or two questions actually I have to consider it. That is 40 marks. Since it is 40 marks question, it should be little bit big one, because, and the thing is, when you are doing calculations, you have to follow all the steps, otherwise it is very difficult to give answers. So each and every number, every item you are writing, I will give you answers. That means half a mark, 1/4 of 1/5, like that. So there may be several. Yes, paper based. It is not the computer based. So you have to write, you have to calculate. That is why I asked you to bring calculators with you. What else? හරිද පුතේ? Actually, it is not a MCQ. You have to do calculations. You have to do calculations. So it is similar to the example papers I am doing. So this is paper 1, and another paper also I will be discussed. So in addition to that, I have given you some examples for employment income. I think you have that examples. We have done that examples with me. So I have shared answers also. Please practice. Employment income, we have already calculated assessable income from employment. So now today we are going to include business income source to that employment income. That means for the calculation of that individual's tax liability, 4 sources should be included: employment, business, investment, and other income sources. So up to now I have done business income. So that is why I am giving that 2 sources for the midterm. For the final examination, we can do the calculation mainly for, but after including investment part and the company tax computation, not the MCQ. Then is it held on 20? I think it is on 26th Friday, because Friday is the date, our lecture date. So it is 26th. No MCQ questions. I think they not allow mobile phones. I don't know, some small mobile smartphones I think they do not allow. Please check with Miss Kalhari. 5:37 p.m. right? Yes, maybe 1 hour. 1 hour. So 5:30 to 7. So maybe, so definitely I will tell you the time in the next week. Normally I give you 1.5 hours. So yes, it is from 5:30 to 7. Let's do the calculation. Dr. Saman Pera is a consultant working in the General Hospital since 2015. When you are doing calculations, please read very carefully, because there are a lot of things that you have to consider when you are doing that calculation. In addition to that, he provides consultancy service. So he is working in the General Hospital. That means he is working as a consultant in the General Hospital. That means he has employment income. In addition to that, he provides consultancy service to Arogya Private Hospital. It doesn't say that he is an employee of that organization. That means if he works there as a consultant, that is also a part of the business income. That means he has a business income, that is consulting service provided to Arogya's private hospital and receives consultancy fees. So that is a business income. Further, he runs a medical institution. So not only the business in this Arogya private hospital, business income, he has another business, that is he runs a medical institution. So that means he has two businesses. The following information related to his income is available for the year of assessment 25-26. So you are going to calculate tax liability for the year of assessment 25-26. So here I have given you the total employment income. So you know, if I give you a breakup of this 6.3 million, there may be lot of income as we calculated assessable income from employment. Salaries, vehicle allowances, fuel allowances, entertainment allowances, then residence benefit, motor vehicle benefit, what else? Payments made to associates, income of the associates, then overtime. There may be lot of income types. So for the examination, I am not going to give you an employment income like this, but it is a it is like an example we have already done. So in that example, I have given you salary income, all other types of employment income, then finally you calculated the employment income. Here my main target is to explain how to include business income to the employment source. So that is why I prepared this kind of question paper. Yes, there's one question, Akila. So, madam, calculate assessable income, employment income and business income only. Yes, you should calculate assessable income from employment and assessable income from business income, because I have not yet done taxable income part. So, therefore, I cannot give it to you. I will test your tax computation knowledge in the final exam. Then income from business. You have given income from employment, that is the total amount of the total types of the income from employment. Then it says the deducted debit for the year of assessment 25-26. Then income from business, as I explained earlier, you have to, this person has two business types. One business income from Arogya hospital, so just he receives service fee. So you have given the total amount, that is consultancy fee. It is also a business income. What is the first step of calculation of the tax liability? First one is the identification of relevant source. So here you should identify these two income under as business income. That is the first test I am going to give you. Then details of the medical institution. You have given details of the medical institution. Summary of the income statement of this organized medical institution. So summary of the medical institution means total receipts and the payment made and expenditure incurred in respect of the production of this income, 82 million. Then there are some few notes. And finally, I am asking you to calculate the employment income and the business income. Here we assume that this person does not have investment income. Okay, now we can start. Total receipt. This is the income he received. Then what we have to do? We have to consider whether this income should be included in the business income or not under section 6 subsection 2. It says what are the income we have to include in calculating business income. So service fee is a part of the business income, service fee. In addition to that, the income received by providing health care service, that is also part of the business income. So we are considering this as a part of the business income. Then we have to consider the expenditure incurred by this person. One by one we have to consider. We have to consider whether these expenses are deductible or not in accordance with section 10, 11 and from 12 to 19. If those are deductible, we can allow them as a deductible expenditure. If some expenses are not allowable, we cannot allow the deduction. Finally, we can calculate assessable income from business. Which business? Business of medical institution. Prior to considering the deduction of these items given in the table, we have to read the notes given in this paper. From here we can go one by one. Payments made to consultants, yes. Is it deductible or not? Actually, we have to incur some expenditure to incur this income. Since this is a medical institution, payments made to consultants is an expenditure that can be allowed as a deduction under section 11. Then salaries paid to the staff. Is it allowable expenditure or not for the production of this 82 million? Is it deductible or not? Yes, it is deductible. So likewise, one by one we have to consider whether this is deductible or not. Now you are very familiar with section 10, 11 and from 12 to 19. You know how to apply specific deduction rules. Then we can do one by one. Then the electricity. Is it deductible or not? Electricity. Without electricity, they cannot do their business. So it is deductible. Then water. Yes, it is deductible. Then building rent. If this building rent is paid to the building we are conducting our business, definitely it is deductible. We have to read the notes given below to consider whether that is allowable or not, because we don't know. There may be some notes relevant for the items, expenditure items. So we have to read that part also very clearly. Then machinery maintenance. Machinery. Do we need machines for the business? Yes. Since this is a medical institution, there may be several machines. What type of machine? Scanner machines, Photocopies, any other equipments, there may be several machines. So machinery maintenance can be allowed, but we have to read the given notes. Then stationery. Yes, stationery. There may be lot of stationery. Stationery should be there to write prescriptions, to wrap some medicines, to envelopes, papers, like that. Then security charges. Yes, that is also allowable deduction. You have to consider whether that is allowable or not, considering the nature of the expenditure and in accordance with section 10, 11 and 12 from 19. Then loan interest. Loan interest. Is it allowable as a deduction or not? Is it allowable as a deduction? Other expenses. Other expenses, no specific definition, but we can consider it as a deductible expenditure. Or otherwise you can mention other expenses have no definition, no description, so we don't know what are the expenses included here, therefore not allowed as a deduction. You cannot allow it as a deduction, but you should mention the assumption very clearly. Then loan interest. Can we deduct loan interest? Can we deduct loan interest? Can? Oh, cannot. Can we deduct? Then donations. Can we deduct? Can we? Oh, cannot. Then depreciation. Can we deduct? Then housing loan interest. Can we deduct? New Year party expenses. Can we deduct? Provision for income tax. Can we deduct? We have to consider. Then let's move to the note. New component was fixed to the scanner machine. So there is a machine. They have fixed a new component to the scanner machine included in the medical equipment. Here you can see medical equipment. Assets details are there. Medical equipments, they have 10 million medical equipments are there. Within that 10 million, there is a scanner. They have fixed a new component to that scanner to improve the efficiency. What is the amount they incurred to improve the efficiency? 175,000 during this year of assessment. This amount is included in the machinery maintenance account. Cost of the scanner is 2.75 million. Why do you have these details? What you have to do? What is the section applicable? How do we calculate this? Then loan interest is paid on a bank loan obtained in the year of assessment 21-22 for purchase of the scanner. So you have given the amount of loan interest, that is 280,000. There is a special description for that loan interest. It says that loan interest is paid on a bank loan obtained in the year of assessment 21-22 for purchase of the scanner. Donation was made to an approved charity. Then you have given asset details. All these assets were purchased in the year of assessment 21-22. What are the assets available? Medical equipment 10 million. This is the cost. Furniture 1.5 million. Computers 3.5 million. Office equipment 3 million. Motor vehicle 8 million. Okay. Can you answer my questions now? Is this loan interest deductible or not? Loan interest, is it deductible or not?
Yes, madam.
Yes, it is deductible. Yes, you can share the attendance. Yes, it is deductible. Yes, very good. That is deductible under which section? What is the applicable section for the deduction of loan interest? Section 11 or section? What is the section? Section 11 says to deduct expenditure if that expenditure was incurred in the production of income. But if specific deduction rules are available for some expenditure, then we cannot go to section 11. Then we have to apply that specific deduction rule for that specific expenditure. For the payments made to consultant, no specific deduction rule. Then we have to consider section 11. Under section 11, we cannot deduct capital nature expenses. So payments made to consultants means that is not a capital nature expenditure. It is just a revenue expenditure. To incur this kind of income, definitely we have to make payments to consultants. So it is a deductible expenditure. Salaries paid to the staff. Under which section? Section 11, because we don't have a specific deduction rule. Electricity, we don't have a specific deduction rule. Water, no. Building rent, no. Machinery maintenance. For the maintenance, we don't have a specific deduction rule. But there is a specific deduction rule. What is it? Related specific deduction rule is there. What is it? Yes, section 14. That is for repair and improvement. Since this is maintenance, we cannot restrict it. If it is machinery repair, then we have to apply section 14. If it says machinery improvement account, then we have to apply section 14. But here it says machinery maintenance. It is just a maintenance account. Therefore, section 11 can be applied. Under section 11, since this is relevant to the production of income, and we can assume that it does not include capital nature expenses, therefore it is deductible. Same as stationery, security charges, other expenses, no specific deduction rules applicable. Therefore, then we have to consider whether capital nature expenditure can be included in this three expenditure or not. If not, we can allow as a deduction. Now we are in loan interest. So, loan interest. For the loan interest, we have a specific deduction rule, that is section 12. Section 12. So, we should read the note carefully. It says, loan interest is paid on a bank loan obtained in the year of assessment 21-22 for purchase of the scanner. So, what is the condition? What are the conditions under in section 12? We can borrow money. That money should be used for the business. So, using that money, we have to purchase an asset. That asset should be used in the business. If those conditions are fulfilled, the interest payment made on that borrowed money is allowable as a deduction. We have to consider whether this loan is obtained to purchase an asset that is going to use in the business. So, scanner is a machine used in the business. Therefore, They have purchased it in the year of assessment 21-22. Now we are in 25-26 year of assessment. Therefore, we can allow that in loan interest under section 12. Suppose this is a company. Suppose we are going to calculate tax liability of a company. Then we cannot deduct this total interest expenditure, but under section 18 we have to restrict this amount. Since this is an individual, we can allow total amount as a deduction. Then donation. Is it allowable or not? No. There is a question. Will the midterm examination ask any section numbers or any only calculations? Yes, only the calculation, but you should mention whether this is allowable or not. Whether this is allowable or not. Only your understanding about the section is more than enough. I will show you the answer sheet. You have to do your calculation in accordance with that answer sheet. Yes, now we are in the donation part. Can we deduct this donation or not when we are calculating the assessable income from business? Your calculation is up to assessable income from business. So, can we deduct donations when we are calculating assessable income from business? Can we or we can't? Can we deduct? Can we deduct or can't? Think applicable sections. No specific deduction rule is available for donations. Then we have to consider section 11, main deduction rule. There are a lot of answers. They said this is allowable as a deduction. Can. You think it can be deducted. Donation. This donation is made to approved charity. Even though it is made to the charity or any other purpose, is it, first of all we have to consider, do we have a specific deduction rule for donation or not? Do we have a specific deduction rule? Do we have? No, we don't have a specific deduction rule. Then what should we do? Then we have to consider whether under section 11 under main deduction rule can we deduct it or not. Under section 11, can we deduct donations or not? Prior to that, we have to consider section 10. Section 10 says some exemptions are not allowable as a deduction. We have to consider section 10 first of all. That is very specific rule. Section 10. Section 10 says what are the items that are not allowable as a deduction. Then section 11 says expenditure incurred in the production of income can be deducted. So what is the donation? Why do we incur donation expenditure? To the production of income? Is it incurred in the production of income? Donation? Or after incurring that income, we are making donations. We have two situations. To incur this income, we donated, or from the income we generated, we donated. What is the situation? Actually, we cannot consider donations as donation as an expenditure incurred in the production of income, but we make some donations from the income we generated. Can you identify? Can you understand that two situations? To incur income, for the production of income, we can incur expenditure, and from the incurred income, from the income, we are incurring expenditure. Two situations. So donations are made from the income we produced. So it is not incurred in the production of income. Donations are not allowable as a deduction when we are calculating the assessable income. But after that, when we are calculating the taxable income, we can deduct assessable income. But when we are calculating the assessable income, we cannot deduct donation. So it is not allowable as a deduction. So in the next session, I will explain what are the deductible expenditure under qualifying payments. Then depreciation. Is it deductible or not? Depreciation. Depreciation is deductible or not? This is book depreciation. Is it deductible or not? Is it deductible or not? Yes, book depreciation is not allowable as a deduction. It is not allowable as a deduction, but we can allow capital allowances. What is the difference between book depreciation and the capital allowances? Book depreciation is calculated in accordance with the accounting standards. Capital allowances are calculating in accordance with the capital allowances are calculated in accordance with the provisions of the Inland Revenue Act. So, capital allowances can be allowed as a deduction. Book depreciation is not allowed as a deduction. Then housing loan interest. Is it deductible? Housing loan interest. Housing loan interest. Housing loan interest. Is it deductible or not? No, that interest is paid. Housing loan interest is paid for the personal use, so it is not allowable as a deduction. New Year party expenses. Is it allowable? New Year party expenses. Yes, Achala, Duvini, yes. It is not allowable. Under which category? It is an entertainment expenditure. I think you can remember under section 10, they specifically mention entertainment expenses are not allowable as a deduction under section 10. So, read section 10 very carefully. Identify what are the expenses not allowable as a deduction. Prior to applying specific deduction rules or main deduction rules, we have to apply section 10. We have to consider section 10. What are the items that are not allowable as a deduction? First of all, if one item is categorized under section 10, then we have to mention it is not allowable as a deduction. Then we have to consider whether specific deduction rule is applicable or not. So we have 3 steps. Refer section 10, then specific deduction rules, then main deduction rule. So New Year party expenses are not allowable under section 10. It is entertainment expenses. Provision for income tax, is it allowable or not? Provision for income tax. Provision for income tax, is it allowable or not? Provision of income tax. No, it is not allowable under section 10. Section 10 says taxes paid under this act is not allowable as a deduction. So under section 10 it is not allowable. Then you have given a profit. So now you know the loan interest, it is allowable as a deduction. Donations not allowable as a deduction. So you have to do this calculation. New component was fixed to the scanner machine. So applicable provision is section 14. Under section 14 we have to calculate the allowable amount as an improvement cost. Here they have incurred expenditure to improve the efficiency of the scanner machine. Therefore, we can consider that expenditure as an improvement cost. So, what we have to do? We have to calculate allowable improvement cost. So, when I am moving to the calculation sheet, I will explain it. Then you have given these assets. All are purchased in the year of assessment 21-22. First of all, you have to check whether still we can grant capital allowance or not. So what are the main conditions to be considered? The year of the asset purchased, whether it is not expired or not. That means from 21-22, 21, 22, 23, 24, 25. So now we are in 25-26. We have to consider how many years they have deducted capital allowances. So for all these items, applicable capital allowance rate is 20% or 5 years. So until 5 years period, up to 5 years period, we can deduct capital allowances from the year of assessment that asset is purchased. That means purchased and used. So we have to two conditions should be fulfilled: ownership and the usage. Owner-user conditions should be fulfilled. So even though they have purchased this asset in the year of assessment 21-22, if they have not used that asset in that year of assessment, then we have to calculate from the year that two conditions are fulfilled. So here we assume that all these assets are used from that year of assessment. So we have to do the calculation of capital allowances. Okay, can I move to the answer sheet? Do you have any questions? ප්‍රශ්න තියෙනව නම් අහන්න. Here you have total receipts and all incurred expenses are provided here. Then you have given the net profit. So when you are calculating you can use two steps. Two steps or two options are there. Either you can start your computation from the net profit, or you can start your computation from the total receipt. If total expenses are provided here, then you can start it from here or here, no issue. If you have not given total expenses, and if I said that other expenses deducted are allowable as a deduction, that means in addition to these deductions, there are some more expenses. At that time, you cannot start your computation from the receipt. Then you have to start your computation from the final figure, that is from the net profit. So for your easy understanding, always we can start our computation from the net profit. I think you can understand what I am explaining. Here you have two parts, two options. You can start from the receipt part, or you can start this computation from the net profit part, because all deducted expenses are provided in this example. But some examples I am not giving total expenses deducted in arriving at this net profit. At that time, how I explain it, I will give you very small table, and then I give you give you a description in the note saying that there are more other than these expenses. All other expenses are deductible under the England Revenue Act number 24 of 2017. That means in addition to these exemptions, there are more exemptions. I think you can understand. So now I am going to move to the computation sheet. Okay, can you see the computation here? Yes, I think you can see. So I have two sheets in this question, in this answer sheet. One is calculation of assessable income and calculation of the profit from medical institution. That means I have calculated medical institutions profit separately, but in your computation you can do all together. So this is the assessable income part. Final computation is here. This is the final part. Calculation of tax liability of Dr. Saman Pereira for the year of assessment 25-26. Definitely we have to write the heading here like this. Then assessable income from employment income. You have given the amount. It is not necessary to compute. You have already given that value, 6.3 million. Then The next income is consultancy service from the business. That amount also given. So we have to make an assumption. No expenses are deductible. Or all expenses deducted are in accordance with the Inland Revenue Act. So you can mention it as an assumption and you can consider the value. Then the medical institute, assessable income from the business income of medical institute. So this amount I have calculated separately. I have calculated it separately. So now we are going to do this calculation. In the very beginning you have to calculate the title of the computation. Calculation of assessable income from medical institution for the year of assessment 25-26. Then you should have add column and less column and the description column. So we are going to calculate business income. We are going to start our computation from the net profit. It is very easy because sometimes there may be some issue when you are doing the calculation. Therefore this is the easy way of calculating the net profit, calculating the assessable income from the business. Then one by one we can move to the down. Payments made to consultants, yes, that is allowed. So you have to write all expenses that are deducted and that are mentioned in this example, and you have to write whether that is allowable or not. When we are preparing our marking scheme, for all these types of expenses I have to allocate some marks. Sometimes it is half, quarter, like that. Therefore payments to consultants, since we have considered the net profit, when we are calculating the net profit, that is the book profit, we have already deducted payments to consultants. That deduction is correct. Therefore we allow that deduction. That is why I mentioned allowed. So definitely you have to write payments to consultants and allowed. Then the next expenditure, that is salaries, that is also they have already deducted in arriving at this profit, so it is allowable. Electricity allowable, water allowable, building rent allowable, that is allowed. Then now we are in machinery maintenance adjustment. Machinery maintenance adjustment should be there. The expenditure is machinery maintenance, but there is an adjustment. You can do that adjustment right now or you can do that adjustment later. If you are going to do that adjustment later, you have to highlight it. Otherwise you will not remember when you are doing your computation. If you can do that computation within that area, that is better. Or you can apply all other, you can consider all other expenditure and then you can do the calculation. Any way you have to do that calculation. So here I have mentioned machinery maintenance, there is an adjustment. Therefore I have not done anything for that amount. So adjustment is made in the latter part of this computation. Then stationery allowed, security allowed, other expenses allowed, loan interest allowed, donations not allowed. If it is not allowed, what we have to do? when we are calculating this book profit, they deducted donations. They already deducted donations. After deducting donations, they arrived this net profit. But since we are not allowed to be deducted, not allowed to deduct that donation, what we have to do? We have to add that donation to the book profit. Then the next one is depreciation. Since it is not allowed, but they have already deducted, therefore, since it is not allowed amount, we should add it to the profit. So this is that column. We have to add to the profit. Then housing loan interest not allowed, add to the profit. New year party not allowed, add to the profit. Provision for income tax not allowed, add to the profit. Now these are the adjustments we made. Then we can move to the machinery improvement account adjustment under section 14. How do we do that calculation? How do we do that calculation? So what is the amount incurred? How do we do that calculation? First of all, we have to consider the cost of that asset. What is the cost of that asset? That is, the cost of that asset is 2.7 million. That is 2.75. Then how do we calculate allowable amount? I think you can remember section 14. It says to consider the previous year written down value. What is the previous year written down value? Now we are in 24, 25, 25, 26. Previous year means 24, 25. Then we have to calculate written down value as at 25th March 31st. How do we calculate it? We purchased that asset in 2021, 20, 21, 22, 23, 24. No. You have to consider it as purchased in the year of assessment 2021 because 2022, because it is mentioned in that in the question. It says all assets in the total assets purchased in the year of assessment 21-22. Therefore, this asset was also purchased in the year of assessment 21-22. Value cost is 2.75 million. We have to calculate the written down value of the previous year of assessment. Previous year means 24-25. So, to calculate previous year written down value, we have to calculate the already deducted capital allowances from 21-22. 21 year of assessment 21-22, 22-23, 23-24, 24-25. That means we have already granted 4 years capital allowances. That means now we have only 1 year's capital allowances to be granted. That means written down value is 2.7 million divided by 5. We 5 or we can calculate in another way. Total cost is 2,750. Then we have to calculate capital allowances granted. After that we will have the written down value, that is 550. So to that 550 we have to apply 20%. Formula is here. To calculate allowable improvement cost, 550 multiplied by 20%, that is 110. What is the incurred cost? That is 175, but allowable amount is 110. So allowable amount is 110, but already incurred cost is 175. So 65,000 is already deducted. Higher excess amount is 65,000. That 65,000 should be added. Should be added to the profit, because they have already deducted 175,000, but we can allow only the 110,000. That means they have already deducted excessive amount of 65,000. Okay. Do you need clarification again? Is it okay? They purchased this asset in the year of assessment 21-22 for 2.7 million. They incurred expenditure to improve that asset. Since it is an improvement cost, we cannot allow total amount, but we have to restrict it according to section 14 of the Act. What is the Act says? Act says to consider the previous year written down value, So previous year written down value means the cost minus capital allowances already granted up to previous year. Capital allowances already granted up to previous year. So this asset was purchased in the year of assessment 21-22. Now we are considering 25-26 year of assessment. That means we have already used this asset for 4 years. Then still we have 1 year to be deducted capital allowances. So that is the written down value. So we have only 1 year period to be deducted, that one. So that is 550 written down value. From that written down value, we have to apply 20% to calculate the allowable improvement cost. Then we have to compare that allowable amount with the amount incurred. They have incurred 175,000, but allowable amount is 110. So this 175,000 is already included in the maintenance account. That means they have already deducted that 175,000 under the expenditure category machinery maintenance. So in the machinery maintenance account, they have already deducted 500,000, including this 175,000. Since that 175,000 is not allowable as a deduction and only 110,000 is allowable as a deduction, the difference between 110 and 175 is not allowable expenditure. Therefore, we have to add it to the profit, book profit. Then other maintenance cost, that is allowable as a deduction. After removing this part, balance is allowable as a deduction. Then we have to calculate capital allowances. You have given medical expenditure. that is 10 million. Furniture 100,005, 3,005, 3 million, 8 million. So we have to calculate capital allowances. All assets were purchased in the year of assessment 21-22. Therefore, still 1 year capital allowances is available to be deducted. That is for the year of assessment 25-26. So we can deduct that amount. 25-26. We can deduct that amount from the profit, because we added depreciation, because we do not allow it as a deduction, therefore we added it to the net profit, but we allow capital allowances as a deduction, therefore we deducted that capital allowances from the profit. Finally, we will have assessable income from business. That income should be included for the calculation of the total assessable income. Here 8.343. So total income is from the employment assessable income and business assessable income. Then total is 20,747,000. Okay. Okay, do you have questions? Do you have questions or not? Is it very clear, or still you have some ambiguities, or still you have some not clarified areas? You can ask now, because you will have this kind of calculation for the mid exam. Yes, Duvini, very clear. Okay. Shall we move to the next question? We don't have much time. I will just explain and you should do the homework. Then we will do it in the next week. After that week you will have midterm examination. Shall I move to the next one? Yes, definitely. I will share this answer sheet with you. Yes, this is then. So you can do all these calculations in one sheet. That means you have to start from the assessable income from employment 6.3 million. Then assessable income from business, Arogya institution 6.1 million. Then you can mention assessable income from medical institution. From this part, from this line, you can start this calculation. You can start this calculation. You can calculate assessable income from this business in the same sheet. So finally you will have this final total assessable income. Machinery maintenance cost 500,000. Allowed or not allowed, madam? Very good question. Allowed or not allowed? What has happened? It says 500,000 was the value incurred for machinery maintenance. It says machinery maintenance expenditure is 500,000. When calculating this profit, they have already deducted 500,000. Okay, they have already deducted 500,000, but it includes machinery improvement cost. What is the machinery improvement cost? That is 175,000. We have only we have issue with only that amount, 175,000. The balance is allowable. That is why I have mentioned other maintenance cost allowed. Here you can see 27, other maintenance cost is allowed. Other maintenance cost is allowed. Therefore, nothing to mention in these two columns. So we have to do adjustments only to that 175 that is incurred in the improvement of that machine. That is why I did that adjustment separately. Understood? Okay. Okay. This is the second paper I prepared for you. Mr. Sampath commenced his business activities from April 2019. It is a garment business. Then you have given profit before income tax 20 million 100,000. You have given profit before income tax. Then you have given other operating income included in the accounting profit. That means these profits are included in the accounting profit. Then we have to consider whether this is allowable or not. Here, since I have not given an investment income, total income is a part of the business income, but this is profit on disposal of motor lorry, this is profit on disposal of land. So these profits are not considered when we are considering tax purpose. But because this is a book profit, this is also a book profit. Book profit should not be considered for the tax purpose. Therefore, since these profits are included here, what we have to do? We have to remove it. Since these profits are included here, we have to remove it. But scrap sale is part of the business income. It is not necessary to remove. Then, in calculating the accounting profit, including the following expenses have been deducted. That means, including these expenses, other expenses also there. After deducting these expenses and other expenses, they have arrived this profit. So therefore we can start our calculation from here. Then you have to go one by one, staff welfare, machinery maintenance, like that. Then you have to mention deductible, not deductible, deductible, like that. Then you have given property, plant and machinery details, land. This is, I extracted this part for your tut 1 or 2 of the capital allowances computation. So both are very similar. So try to do this calculation by your own. I will explain this in the next week. Then notes are there. All are relevant for the capital profit and loss of the depreciable assets. Then depreciation. Then staff welfare expenses, I have given you a description. Therefore, once you see the staff and expenses, don't write it is allowable. Prior to do these adjustments, you have to read the paper very clearly. The whole paper should be read. Then you can identify what are the adjustments to be made to that specific expenditure. So staff welfare expenditure has some several types of expenses are available for the staff welfare expenses. So you have to read one by one: death expenditure, tea expenses, staff welfare, factory safety uniform, period ceremony. You have to consider whether these expenses are incurred in the production of income or not, whether these expenses are allowable under section 10 or not, whether this expenditure has a specific deduction rule or not. You have to write it, not the exemption, not the exact section number, but the content of the section should be mentioned clearly. Then advertising expenses, then foreign travel expenses, you have a breakup, then balances of provision for gratuity account, then carried forward business loss. That means I have covered almost all the specific deduction rules and deduction rules in that. Then you have to calculate the assessable income from the business. So try to do this calculation, then you can ask questions in the next session. We will do this in the next week. After that you can sit for the examination. You have 1 week time period to practice these computations. In addition to that, do the calculations we have already done for employment income. Your question paper will be included that type of employment income details and the business income details all together. Combination of that employment income and business income. Okay. So what are the questions you have? I have already shared these 2 questions. Try to do the calculations. Actually, this is a homework. No issue? All are clear? ප්‍රශ්න නැද්ද පොඩ්ඩක් අර? හරි ෂෝක්නේ. එච්චර හොඳට තේරුණාද හැමෝටම? නැත්තම් ප්‍රශ්නේ අහන්න තේරෙන්නේ නැද්ද? Okay. If it is clear, we can stop the session. Okay, very good. Yes, very good question. Danushan. I'm sorry if my pronunciation is wrong. So there is a question, Madam, why we can't deduct the donation given to the government approved charity? Here we do not consider whether it is to the government or to the charity or anything. Donations can be deducted from the assessable income, not in arriving at the assessable income. Go to the first format I have given to you. What we have, first of all, we have to consider the relevant source. Then we have to calculate assessable income from each source. Then we have total assessable income. From the total assessable income, we can deduct qualifying payments and reliefs. So donations can be deducted under qualifying payment. That is why I explained in arriving at the assessable income, we cannot deduct donations, but after that we can deduct donations in arriving at the taxable income. That means donations can be deducted from the assessable income. Is it clear? So I will. Is it clear or not? Okay. Shall we stop the session? Can I say good night?
Okay, madam.
Okay. Then good night to all of you.
Good night,
Try to
madam.
do this. Yes, try
Good
to
night,
do
madam.
these calculations. Thank you very
Good night,
much.
madam.
Good night. Good night.